Whether you're a seasoned real estate investor or you're just getting started in the world of exploring rental properties, understanding the cash flow is absolutely essential to you. And this is what allows you to make informed decisions along the way to optimize your investment and to secure your financial future. Let's take a closer look at how you can analyze and interpret the cash flow of a short-term rental and what it takes to make a smart investment. Get ready to take some notes and let's go ahead and get started.
One of the things that is really important, when you're identifying specific markets to target is who is your demographic. The best thing to do with short-term rentals, in my opinion, obviously, is just to capture people that are already going to a specific destination as opposed to trying to draw people there. So do you have any examples of that up there in your markets, any that you're involved in, that you specifically went after because they are that vacation destination or because they are, conference driven for, business conferences and the like?
Absolutely, yeah. So I have it on my screen here right now. So we're going to walk through that example just next.
Great.
So one of the transitions we had over the last, I would say, year and a half in our business, because we started off on controlling but not owning properties. Now, a goal we had for a long time was we wanted to start acquiring real estate. And this is just more from a long-term wealth building perspective, but also from a lifestyle perspective, because the properties we started buying were located in a market called Canmore, Alberta. Okay, you can see that here in the listing. And what's unique about this, it's a very small little town. There's only like 10,000 people that live there. But if you've been to Canada, you'll understand really quickly what is so unique about this area. It is so this is within the Bow Valley inside of Alberta. The scenery there it's irreplaceable. You cannot. It's actually kind of hard to describe how stunningly beautiful it is there. But what was unique about this was the reason why we bought here was a few different reasons. One, from a lifestyle perspective, we actually went to the mountains several times a year. So we're like, well, heck, we'd love to own a property in an area that we frequent so that, if we need a place to stay, we can obviously, use it up for our own purposes. But as we peeled back the layers of the onion more and more, we just found some of the just very appealing characteristics as to why this was going to be a good investment for us. So one, very short-term rental friendly market. This market is driven entirely almost by tourism. It is the lifeblood of what keeps this town tick. So in terms of the regulations there, it is strictly enforced, but they actually had short-term rental specific zoning for it. Okay, so because there's specific zoning and specific corridors of the city, there's almost zero chance they're ever going to change that because they know just how important it is to have that tourism dollar flooding through their economy. Okay. The other thing that we noticed was Canmore's, it's not a new story. It's been around for a long time, but a lot of operators that were competing against this market. What's interesting is that it almost has as many listings as Edmonton does, even though it's like 1% of the size in terms of population. So it's a very competitive market. So because it's competitive, we wanted to find different things that we could do in order to stand out, in order to really compete at a big level. Okay. So part of our analysis was we knew regulations, it was top shelf. There's constant demand on this market because people flood through this town all the time. And we knew it was going to be a safe long-term bet, but how are we going to differentiate ourselves? Well, as we were going through the research process, what we discovered was, again, most of the competition in this market was, again, in the 1 and 2 bedroom space, because actually buying a property here is actually really hard to do, Michael. The banks, you had to come up with a 35% down payment. So you got to have a lot of chips in order to even just get into this market to begin with. Okay. Now, when we acquired this unit, so this was about over a year ago now. Okay. So we've had a full 12 months on it. So let's dive into the financial statement. Now, the numbers on this are actually going to look pretty appealing for the audience. Okay. So this was our last 12 rolling months on this particular property. Okay. So in terms of income, again, compared to, some of the best properties in Edmonton cannot even hold a candle to some of the numbers that we get in this market. So this is just a simple 2-bed, 2-bath townhouse. But what we did in order to differentiate it, we actually increased the sleeping capacity by having a bunk bed, by having a sofa bed. So we can actually sleep 10 people under this roof. And what's good about that is, if ski groups are coming in, and larger, if there's more than one family, we can have them all under one roof and they can split the cost. Okay. Anyways, without digressing, this property did just shy of $134,000 in revenue for us last year. So break that down, that's roughly 11-ish grand a month, give or take. So not too shabby, right? Again, a lot of the numbers you're going to see here are almost very identical to what you're going to see on some of the past examples. Okay. Now, just diving a little bit further into this, this property actually bottom line after all expenses were paid, just shy of 70 grand to the bottom. So over a 52% profit margin for us. So this is a very, very good unit for us in our portfolio. And in fact, if you look a little bit deeper here, our accountant, because we had our year end, this is, without getting into all the details, he charged depreciation on this. So that when you actually back that out, because depreciation is a non-cash expense, the profit margin on this property was actually 62% after all bills were paid. So pretty attractive.
That's a smoker.
This has been a very, very good investment for us.
Yeah, fantastic. So obviously identifying great destination spots like that, you guys have identified that and you're filling out your portfolio. That was a smoking deal. I mean, $130,000 on that investment, great bottom line cash flow on that, and obviously a super healthy return. Additionally, you guys operate in places where they're business friendly or business destinations as far as conferences and the like. Those are great places to have short-term rentals as well, right?
Absolutely. And this is really important, especially for anyone that's looking to get into this industry. And this is a question we encourage all of our students to really think about and ask themselves when they're getting into this, because if you're just really thinking about how much money can you make versus the type of clients and the types of customers you want to help and serve, you're gonna get weeded out of this industry very quickly, okay? Because you really have to come from a place of service and a place of really actually wanting to help people and add value if you really want to stand out and be able to compete at a high level in this business, okay? But to give an example on this, a lot of people think that, oh man, do I have to be in like a sunny destination or a vacation spot or something that has a lot of tourism draw in order to make this work? The answer is no, no, and no, okay? I'm gonna give you an example in our own portfolio. So circling back up into Edmonton, again, this is not a tourism market. I mean, sure, at one time, we had the biggest mall in the world. I think we've been eclipsed by that many times over by other countries, but what's interesting about the story I'm going to tell next is this will really highlight a whole other opportunity that I think a lot of people are completely missing within short-term rentals, especially within this industry, okay? So on this particular property, again, this is actually a property that I used to live in myself. This was my personal residence, but then we ended up turning it into a long-term rental. That's a whole other story. That'll be another video for another time, Michael. But we eventually turned it into a short-term rental, okay? Now, what happened on this particular property was we ended up getting a booking last year for 6 months from a work crew that was coming into town. And what was going on is they were actually building, they were part of a construction crew that was building an Amazon fulfillment center in our city, okay? But they locked this property up for 6 months. And let's dive into some of the numbers there. Now, I have numbers here from April to December. The reason why is because we used to have this property in a different business entity. We rolled it into another one. So without getting it like super complicated, we just use the numbers from when we made that transition. So just want to be 100% clear and transparent on that for any of the viewing audience, okay? So when this booking came in, this is around April, May of last year, they booked my property for 6 months for over $6,000 a month, okay? My operating costs on this property, so between my mortgage, my property taxes, my utilities, all of those other things, is right around $2,000 to $2,300 a month, okay? So on a net cash flow basis, I was earning around $3,000 to $3,500 a month, just like clockwork on this property. So this is more of what you would call, instead of you have long-term rentals, which is typically 12 months, and you have a lease with the tenant. Short-term is really anything under 30 days. This was more in what is now starting to become a lot more popular, which is called the mid-term rental industry, or the mid-stay industry, people call it. So anything like month-to-month or 30-plus day reservations, okay? So getting into some of the numbers here is pretty simple, because this booking came from Airbnb. That was the only booking source that we had for really all of entire calendar, because as soon as they booked it, we were just getting a transfer into our account every month for right around $6,000 a month, give or take, okay? service fees coming off. I barely had, we had sent our cleaning team there just a couple of times because they were just really nice guests, and we wanted to give a good service to them. Now, rent or lease. Now, a lot of people might be wondering, well, wait a second, I thought you owned this property. Why is there rent or lease in there? Well, personally, what we do is I actually rent the property from the company to generate rental income to me personally. So that creates additional write-offs for the business. And then I can use depreciation to basically wipe out all of the tax I have to pay on that income. Okay, so when you start to own property, you can get a little bit creative in terms of how you handle some of the income and expenses that come through on there. Now, what was interesting, because everyone always likes, when you first hear the initial stages of that story, you might think, wow, like that's about as close to passive income as you can possibly get. And I would agree with you, but what you'll notice, Michael, repairs and maintenance, almost $8,000. Okay. I had to redo the roof on this property this year. So now this property, it is a duplex. So I did share the cost with my neighbors, around a $15,000, $16,000 touch, but everyone loves to talk about passive income, Michael. I'm going to tell you, on that day where I had to write that check, it did not feel very passive to me in that moment.
Yeah, that's not a fun check to write, of course, but hey, that's the cost of doing business. You're not going to have to replace that roof again, obviously, anytime soon. But it is what it is.
It is what it is. Yeah. So just to kind of run through the rest of this, some viewers might find this fascinating, others might be bored to tears. So we'll just get straight to the point. Okay, so obviously we had some supplies in there as well. The guest actually ended up buying a lot of their own supplies, so that's actually really another attractive dynamic of the midterm rental space, that it's actually a lot easier type of rental to run because guests will typically get their own supplies. I think I talked to this guest twice within a 6-month period. So it took up almost none of my time. Now, a couple other things. So property insurance on this property, we got a really good deal with a local carrier here, so it's not a tremendous cost to me personally. Utilities, pretty reasonable. So after all that was taken into account, even still after a relatively large amount of CapEx that I had on this property, we still did 35% to the bottom line, and that's in addition to me taking a nice income from this as well in terms of the lease that I charge back to myself in order to reduce some of the overhead. So again, another wonderful example, I guess you could say, of just different ways and different means of how you can make money in this industry.
Yeah, and I love you diving into the different property types, the different examples, and ultimately how you guys went through your thought process up front and identifying these properties and why, and then just lifting up the hood here and showing us the actual financials, so everyone is seeing them for themselves. It's not talk. You guys are doing these deals. So guys, if you're watching, you've been on the fence, or you're seeing this for the first time, you want more information, or you already know based on what you've seen that you're interested in moving forward with the BNB Bootcamp, go ahead and email bnbbootcamp@vipfinancialeducation.com. Be sure to include your first, your last name, the best number to reach you in the body of the email, and BNB Bootcamp conversation in the subject line, and someone from Michael and Katrina's team will get back in touch with you ASAP. Thanks for joining us today. Would love to have you back on here in a few months, and would love to continue to bring your students on here. We love to get the testimonial feedback from them, the good, the bad, and the ugly. So in the meantime, guys, thanks for joining us here on the video today. If you want more content on the short-term rental space, and in particular BNB Bootcamp, go ahead and smash that thumbs up button below. We love new subscribers, so go ahead and subscribe and ding that bell notification if you want to see more videos from us here on the VIP Financial Education YouTube channel, where we help you go further, faster financially. Until next time, take care, make it a great day.